One common question for any new investor is it a good time to start an equity SIP? At the time of recording this episode, the markets are down and the sentiment is that of a recession. Now, all the finance gurus and random talks may tell you, yes, the time is now, start early, blah blah blah. But I will go in depth and present facts and reasons, and also I'll help you decide a way that I would make a decision. Welcome to Simplified with Ashish. I am Ashish Soni. Every week I simplify the complex topics in markets, finance, and the business world. So if you're interested in these topics, consider subscribing to get the simplest explanations of the most complex topics. Nowadays, many people are stopping their SIPs due to market volatility arising from the SVB crisis, Credit Suisse collapse, rising interest rates, etc. etc. The SIP stoppage ratio, which tells about the number of closed accounts to the new account openings, shot to a 27-month high of 0.68 in February 2023, compared with the long-term average of 0.51, according to the data from Association of Mutual Funds in India, or AMFI. This shows that investors are turning cautious. Now let's see. What is the main criteria for people to invest in equity SIPs? The main criteria is to earn a higher percentage than fixed deposits, inflation, government bonds, etc. etc. The fixed deposit rate in India at the time of recording this video is 7 to 8%, depending upon bank. Inflation is about 7.8%. So we need to beat the 8% mark. So we need to find out what are the chances that our SIP earns a greater than 8% return if we start an SIP in the current month. So let's look historically at how this has panned out. Let's assume you have invested a monthly sum of 10,000 rupees in Nifty 50 for 10 years, starting on April 2013 and ending on March 2023. You would have netted 12.14% return, successfully beating the 8% XIRR mark we agreed on. But then you would wonder, this is just one piece of data, and should we start a 10-year long commitment based on just one piece of data alone? Absolutely not. In fact, I would urge you not to do this. So then, we should look at any 10-year period and check whether we will cross 8% with confidence or not. For this, let's check from the start. Let's check from the day Nifty 50 started trading, that is January 1999. Let's check for all the 10-year periods between Jan 1999 and March 2023. There are 172 10-year periods between these two dates. Now I have crunched all the numbers in this Google sheet, which is linked in the description box below. If you started an SIP in Jan 1999, your last installment would have happened on December 2008, a 10-year period. This would have netted you an XIRR of 12.53%. Similarly, if you started an SIP in February 1999, your last installment would have happened exactly 10 years from then on January 2008, netting an XIRR of 10.96%, so on and so forth. Making sense of the 172 data points, there is a 96% probability that you would have netted a greater than 8% XIRR in any month that you started your SIP. And that is why, should you start your SIP in the current month you're watching this video? The answer to this question is yes, you should definitely. In fact, there's a 48% chance that you would have beaten the healthy 12% mark as well. This data-backed result is proof that you can start your SIP in any month that you want, and you would definitely beat inflation, FD rates, government bond rates, etc. etc. So don't wait, start your SIP now. That's it from my side. Thank you so much for watching.